Yeah, what's up for you guys watching this on the YouTube replay? I appreciate y'all. We're going to be looking at a lot of stocks live in here. I'm just going to be looking at the chat, seeing what stocks people say, and I'll show you all my portfolio and some stocks I just bought today. Actually, I just made a huge change to my Roth IRA. I'll go ahead and show you that real quick. I just simplified it. The only two stocks I own in here now is 5 shares of Kroger and 10 shares of InnoData. And I actually bought 5 shares of this one this morning. So that's pretty cool. But anyway, here's our main portfolio right now. We're down 0.25% on the day. But look at us year to date. We are down 15% year to date. If we actually just compare that to like the SPY, let's see, they are down 15.6%. So we're pretty much doing the exact same as the S&P 500. So yeah, here are all the stocks that we own in here, and here's my total percent change on every stock. So we're down bad, like on Google, United Rentals, Constellation Energy. McDonald's is doing its thing though. McDonald's is holding up great. They actually do good in a recession. So we also have our Moo portfolio over here. We're down 0.2% on the day, and yeah, here are all the stocks that we got in here. You know, Actually, we're slightly red on the day. Thanks to CubeSmart right here. That's a higher yielding dividend play. But yeah, I'm really looking to buy more Amazon, dude. Amazon, I want to see them under 170, and I'd love to pick up just one more share of them. Also, Comfort Systems, I just bought another share of them yesterday at 285, and today I can't believe the market today. And we also have our Weeble portfolio over here. So I haven't checked this. Let me log into this. Hopefully it doesn't show the password there. But yeah, here are the stocks that we own on the day. Super Micro is up 7, Reddit's up 5, Sprouts Farmers Market. So yeah, actually, well, I mean, we're still down 1.36% on the day. Yo, what up, Sam? He said SoFi. I want to sell my Baba for SoFi. What do you think? So yeah, SoFi Technologies. I do own this company. Check this out. I own 24 shares of them. I honestly maybe just sell a little, again, not financial advice here, but maybe just sell a little bit of Alibaba for SoFi. They're both pretty volatile stocks, but I think SoFi is a little bit more risky. So I would just do it maybe a little bit, but check out specifically on SoFi this financial services revenue growth. I mean, this is incredible. It's up 85% to a new record. So they're growing like crazy. Yo, what up, Sermon? Do you have any free cash left? Yeah, dude. Oh, and I'll show you that in a second. But also about SoFi, look at the net income right here. A lot of people didn't take SoFi seriously. They used to just burn money every quarter, but now SoFi is making net income every quarter. So yeah, I do like that one. The valuation still might be a little high here, but yeah, I have $500 of cash left. That's it right now, Sermon. I'm down to $500 of cash, so I'm being careful. I'm just trying to hold on to it right now. Um, why was everyone saying Black Monday is going to be today, Marcus? Yeah, dude. Basically, there was a headline today that came out that Trump was going to give a 90-day delay on tariffs, and it sent the market straight up. But that headline turned out to be false, and the White House confirmed it, which was unfortunate. But I mean, a lot of the rally we have still kept. Like we haven't completely sold off. Like if in the pre-market, Google was literally $139. I didn't believe it. 139 on Google. Well, now it's 147. But I still can't believe Google's such a great company. They're down 23% year to date. So there's a lot of volatility out there. Yeah, if you guys got any stocks you want me to look at, let me know in the chat. I've around 1.7K left. Yeah, I'm reading both the YouTube and the TikTok chat. So what's up, guys? Um, yeah, if you want to subscribe to my channel, I'm streaming on there as well. Someone said Visa stock. Yo, what up, user65? Yo, Visa is a classic Nancy Pelosi stock. Well, honestly, this is just a great financial company. Those credit card transaction fees that are slowly bankrupting us is making Visa a boatload of money. And this is such a quality company. Check this out. If we look at the bottom line here, they're making literally 5 billion of net income a quarter. So they're basically making 20 billion a year. Then they also pay out a nice little dividend, 0.7% qualified dividend. So yeah, Visa, they're a $600 billion company. They're huge, so I do like them. Oh, what is MELI? What up, PQ? MELI. Haven't heard of that one. So, oh, Micro Libra, or I don't know if I'm pronouncing that right. I actually have heard of this company before. I forgot about them. Let's see. They're in commerce services. So let's see how their sales are doing. Actually, they're in commerce, financial, credit revenues. So let's see. Wow, look at that net income growth. That's phenomenal. They just made a record 640 million of net income. Wow, this actually looks really good. Cash from operating activities was 3 billion. Wow, actually, this is a really nice company. I think they're a bank. They're in the financial services, but I really like them actually. What should I be putting my money into, brother? Hey, not financial advice. Check out QQQM. It's my personal favorite ETF. Again, not financial advice, but This just diversifies your money up for you into all these great companies like Apple, Microsoft, Nvidia. It's the Nasdaq 100. Oh, yo, someone said Apple stock. Yeah, dude. So here's Apple right here. They're getting affected hard by the tariffs. If you were ever looking to buy Apple stock, right now it's looking very attractive. They're down to once. Look at this. Like literally last week, this was a $220 stock. Well, it's down 6% today. Let's go do some analysis on Apple. The PE is a 28. Historically, that's pretty fair for Apple. We can see their smartphone market share. Obviously, they have a 23% market share. Most of the revenue comes from their iPhone, then their services revenue. And here's why Apple's down so much. It's because they have so much international exposure. Did you guys know that only 36% of Apple's revenue comes from the US? Then they're in EU, China. China's doing retaliatory tariffs, Asia, Japan. So anyway, actually, what a really cool part about Apple is their services business. Whenever you buy something in the App Store, they take a 30% fee on that, which is really cool. I guess not if you're an app developer. All right, let's see. Do you think more red is coming? I hope not, but probably. Here's ticker symbol VZ. So someone yo, what's up, Renz? He said Verizon stock. So this is a great dividend paying company. Again, you're not going to outperform the market in the long run. Like, look, the stock is the same as it was in 2018, but what you do get is a very nice 6.4% dividend yield, and it's a sustainable payout ratio, 65% payout ratio. Which app is this? Oh, hey, this brokerage right here is called Mumu. If you want to get it, it's in the link tree in my bio. It's the first link there. Yeah, I love all the analysis you can do on this app. And yeah, you can track like all the super investors portfolio. Yeah, it's a brokerage, so if you want to get it, link tree in bio, first link. I just bought some more Grab. Yo, Drake, what's up, dude? So this is Actually, this is a very cool company. Actually, they do what Uber does, but they're in all these other countries. So check this out. They're in. You notice you don't see the U.S. and Canada on here. So they're in all these other countries, and they do exactly what Uber does and Uber Eats. And they just now went profitable. They used to lose a lot of money every quarter. Well, now they're just now getting net income positive, which is great news. And Uber is the largest shareholder. Uber owns 13% of this stock. So if you own Uber, you technically own a little bit of Grab. And I think this Uber buying into them was so smart because this gives Uber a lot of, international exposure to all these other countries that, Uber is mainly like US, UK. So anyway, I do like them. Do you have any idea why stocks suddenly pumped? It was because there was a fake news headline that we're giving a 90-day delay on tariffs. White House confirmed it was fake, but that's why I think the market rallied. So yeah, here's Microsoft right here, and yeah, what's up? We'll look at Alphabet as well. We'll look at Google. So here's Microsoft. This is another great software company and hardware. They have Windows, but yeah, look at their premium subscribers right here. They have 82.5 million premium subscribers, and they have three main segments of business. Their intelligent cloud. Yeah, hey King, this brokerage, if you want to get it, it's in that link tree in my bio. It's the first link there. But the intelligent cloud business, actually, let me look at this on an annual basis. Look at this growth. This is very impressive growth, and this is just their intelligent cloud. Let me look at their productivity. Look at that, it's up 12%. What about more personal computing? It's up 13%. So yeah, I really love Microsoft. It's just a buy and hold. And look at the bottom line. They made 24 billion of net income just in the most recent quarter, and it's up 10%. So the net income's still growing with double digits. So I do like that one. They're just quality. They own Minecraft. You heard of the Minecraft movie? That's owned by Microsoft. Which is pretty cool. When do you think it's going to bottom? When do I load up on buying stocks? Hey, I don't know when the bottom is. See, I don't have a crystal ball, unfortunately, but what I'm doing is I'm just dollar cost averaging into the market. But also, I'm showing this stock right here because you want to make sure you're dollar cost averaging into a high quality stock. You don't want to be buying a low quality company like this one right here. This is one of my biggest losers. This is only a $300 million company. So if I was looking for a stock to buy into right now, again, not financial advice, I'd be looking at like an Amazon and a Google. So yeah, people kept saying Google. Let's give them a quick analysis. And by the way, I do own them, so I might be biased. Yeah, here's my main taxable account. We're down on the day, but look at this. We do own 16 shares of Google, and we were also looking at Meta. We got 4 shares of Meta. But anyway, let me show you why I personally own Google. I love the metrics here. Look, the valuations, they're trading at an 18 time PE. So they're trading at 18 times net income, which is very fair. And the net income's still growing. It's up 28% to 26 billion just in 3 months. The net margin's growing. It's a 27% net margin. And look at this. They own so many businesses inside one. They have they own Android, they own YouTube, they have their Google Cloud, they have their own quantum chip, they own Waymo. Look at just their Google Cloud business. It's up enormously, 43 billion of revenue now. So anyway, Google I think will be a great winner in the long run. I'm just holding shares in them. I'm not trading Google, just hold shares for the long run. No need to ever sell them. Again, not financial advice. I'm no expert. I'm down all time. I'm down $800 in this account. So anyway, let's keep going here. Um, hmm, three stocks. How should I put Nvidia, Apple? Oh yeah, we haven't looked at Nvidia today, so let's do some analysis on Nvidia real quick. This is another big tech company. They're under $100. $95 Nvidia is crazy. So let's see. The PE is a 23. Historically, look at that. That's the lowest valuation they've been at in literally 5 years, which is crazy. And look at their PC GPU market share. You get a lot of exposure to GPUs with Nvidia. 18% market share. Their automotive revenue keeps on going up. Nvidia partners with WeRide and GM, but this is what you won't believe. Look at the growth of their sales. You can't make this up. This is why all the hype is deserved on Nvidia, in my opinion. The sales are up 101% to 36 billion, and not just the sales, but the bottom line. The net income was 22 billion. So until the sales go away, the net income growth goes away. I think Nvidia's a buy right now. Again, not financial advice. Oh, hey, this is a brokerage right here, Star. If you want to get this brokerage, it's in the link tree in my bio. It's the first link there. And also check this out. Nvidia owns a lot of individual companies. Like remember how I said Nvidia was partnering with WeRide? Look at this absolute pump and dump. Nvidia took a stake into WeRide. Stock goes to $40. Now it's at $10. Wow. I wouldn't buy this one. They're Chinese. They just IPO'd. But hey, they own ARM Holdings, APLD. That's a cool one, actually. But anyway. Show Nancy's. Yeah, y'all want to see Nancy Pelosi's portfolio? She's been buying some weird stuff like PayPal, Comcast. I mean, it's only 0.6% of her portfolio. Here are our larger holdings. Our largest holding is Apple, which is down. Look at it. Look at Apple today. This is nuts. Literally a week ago, Apple was a $220 stock. Now it's 170. So yeah. Anyway, uh, let's keep going here. Yeah, this is a brokerage. Uh-oh. There we go. Sorry, I'm back. Um, Amazon, QQQM. What are five stocks? I don't know. Yeah, hey, this is a brokerage. If you want to get this app, it's in the link tree in bio, first link there. So yeah, this is where I like to park my idle cash. Like if you look in the middle of my screen, I got $500 of cash. But anyway, I have some watch lists. I have a stock actually, a couple I wanted to go over here. Here is my watch list of all debt-free companies. So every stock in this watch list right here has no debt. So for example, I own this one. For example, I own DocuSign. I was loading the boat on DocuSign like well over a year ago. They are down bad, but I would stay away from DocuSign personally. But I have some interesting ones you've probably never heard of before. Like, did you guys know Yelp is publicly traded? Ticker symbol Yelp, and that's a company I do own, by the way. I like being transparent here. I'm sure I'm down on the position. Yeah, we have 19 shares of Yelp. This is a completely debt-free company. They have no debt, so they have a lot of cash. Reddit as well. I own some Reddit stock. This is another great growth company. A lot of people make fun of me for Reddit, but they have no debt. 1.9 billion, or let's see how much cash they have. 1.84 billion dollars of cash. And look at this revenue growth. The growth is insane. It's up 71% to a new record. So incredible sales growth on Reddit. Anyway. And again, just because they have no debt doesn't mean they'll do good. Like look at Zoom for example, and this is one of my bigger losers. Zoom actually, check this out. I've been holding on to Zoom shoe. Like look, I have to zoom out just so you can find my cost basis. Look at this. I have 7 shares at $153. So the last time we bought a share of Zoom was 3+ years ago. So anyway, yeah, that's why I try and look for like the most high quality companies out there, and that's what I think I found here. This is my personal list of favorite stocks right here. Again, not financial advice. What's the best app? Hey, if you go to the link tree in my bio, I have a comparison. I use all these apps right here. I compare all three of these apps. But my personal favorite brokerage right here is this one right here. It's called Moomoo. It's in the link tree in my bio. It's the first link there. So anyway, what up, Johnny? He said, what about him? So I actually really like this stock. So there we go. So yeah, this is Hims and Hers. They sell like a bunch of different prescriptions, and they also have no debt. This is a really cool thing, but the best part about Hims is actually the sales growth. Look at this sales. It's up 95% literally to a new record, 480 million of sales. And They're making profits. If we go to the net income right here, they're making net income every quarter. They're making free cash flow every quarter. Free cash flow is up. It's going to be like 300 million of free cash flow a year now, which is crazy. And they have no debt, lots of cash. How much cash they got? 300 million of cash. It's making them interest. So I do actually really like that one. Um, let's see. Should I invest now? I would recommend dollar cost averaging right now. Too much winning. Yeah, dude. Morningstar, I feel you, man. What happened? Hey, Sonny, if you want to get this brokerage, it's in the link tree in my bio. It's the very first link there. So here's a company I would actually avoid. And yo, Nino said ticker symbol plug. So this is plug power right here. I actually feel really bad if you own this stock. And this is what you have to really look for. So if you look in the top right, the market cap, this is a $1.15 billion company. So the whole company is worth $1 billion. But look at the net income just in the most recent quarter. Literally in the most recent quarter, they lost $1.3 billion. Now, I don't know about you, but that just doesn't, this is not sustainable. And the sales are down 13%. So they lost the growth of their sales and they're losing a boatload of money. Literally, I'm actually considering shorting this one, but it's just hard to short something that's already so at an all-time low. A little bit of news could make it go up, but that one's probably just going to slowly bleed out more and more. I feel bad if you own that one. I'm not trying to bag on anyone's stock though. What about QQQ? Yo, Lindsay, in my opinion, don't buy QQQ, buy QQQM. It's actually the exact same ETF, but with the lower expense ratio. And you've probably never heard of it because they don't promote it. They don't market it. Of course they don't, because they promote QQQ, which has the high expense ratio. They make more money. Anyway, QQQM, this exact same thing. It's the NASDAQ 100, breaks your money up into Apple, Microsoft, NVIDIA. So yeah, someone's saying, what about Apple? Look at Apple today. They're down 5% here. We'll do a quick analysis on Apple since they're the most popular or biggest market cap company in the world. They're trading at a 28 PE. Their smartphone market share is at 23%, which is crazy. And let's see, look at their margins. Actually, they, have their hardware, which is their iPhone, but they also have this high margin software, their services revenue. Whenever you buy something in the App Store, Apple takes a 30% fee on that money. And look at their services revenue. It's crazy. It's nearly 100 billion of revenue a year, and it's high margin for them. But here's why Apple's fallen so much. They have so much international exposure. Only 36% of Apple's business is in the US. Then they're in EU, they're in China, and all these other countries. So yeah, I think that's why Apple's falling. The retaliatory tariffs might hurt them or something. But I think that's one that probably want to buy the dip on. Again, not financial advice. I'm not an expert. Hey, again, by the way, I don't sell anything. I don't have a chorus book, WhatsApp, Telegram, Discord, none of that. So watch out for people impersonating me. And if you do want to support me, though, the only way to support if you subscribe to my YouTube channel. I'm also streaming on YouTube, so if you missed anything, you can replay it on there. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But anyway, here's ticker symbol TSM. I absolutely love this stock right here, and I think this one is a just like kind of like a it's like Nvidia. Well, not really. So they produce the 5 nanometer wafer chips. So check out their market share. They actually have a 67% market share. Their market share just keeps on growing. But look at this right here. The net income was 11 billion just in the most recent quarter, 10 billion the quarter before. So they're printing net income, which is ridiculous. And if you buy them, you get a 1.6% yield. So this is a nice semiconductor play. It's similar to an Nvidia. Um, it's a pawnbroker. Oh yeah, Easy PW. So yeah, this stock is very interesting actually. So check this out. They don't pay a dividend. So this is what I like about them. New York. This company does not pay a dividend. And let's see, how are their financials doing? So U.S. Pawn. Oh, they're like a pawn shop. I don't know. But they're making net income every quarter. This is what's cool about this stock. They're making net income every quarter. They don't pay a dividend. Um, so they're doing like stock buybacks. So yeah, actually, this is an interesting one. I'd have to do some more research on that one. Yo, Jeff Max, super cool to see you here. Yeah, he said Shopify stock. I love Shopify. I used to have a Shopify store. It's actually a Canadian company. I used to have a Shopify store, and anytime you sold a product, Shopify would just take a 2%, 2.5% fee on that. And look at their sales growth. Literally in 2019, the sales were 1.5 billion, but for the full year 2024, they did nearly 9 billion of revenue. So Shopify is a pure growth company. I love the growth here, and they're profitable as well. 600 million of free cash flow in the most recent quarter, incredible. And their net income positive as well. They had a little one-time adjustment there. They're pretty much making net income every quarter. But yeah, I love Shopify, man. Yeah, congrats on the buy, Jeff. What's the app? Hey, this is a brokerage. If you want to get it, it's in the link tree in my bio. It's the first link there. Yeah, here's a cool thing. You can like see, yeah, the Buffett holdings. Yeah, so check this out. Warren Buffett has a lot of the high yielding dividend stocks like Coca-Cola, Bank of America, Chevron, the oil stocks. So yeah. Anyway, Bro, thoughts on Reddit? Ooh, okay. So I actually do own a little bit of this company. Yeah, there was my SoFi position, but I'll be really quick about this. So I own 4 shares of Reddit. Again, like not much. And I don't want to have a lot of money into Reddit, but here's the main part why. You can't make this up. Like forget that it's Reddit for a second. These sales are impressive. It's up 71% to a new record. I mean, also, they have no debt at all. Look at this balance sheet. Their assets are growing. They have no debt. 1.9 billion of cash, making them a lot of interest. So that's why I personally picked up some Reddit. I love the fundamentals there. Yeah, yeah, user angel. I might be biased because I own them, but yeah. All right, let's see. I'm invested in SMR. Is that a nuclear stock? Let's check it out. SMR. So new scale power. So yeah, this is a nuclear energy stock. I believe they own some like small reactors. Yeah. Hey Ed, if you want to get this app, it's in the link in the description. It's in the link tree in bio. I'm reading the YouTube and the TikTok chat. So anyway, yeah, if y'all want to help me out, I'm streaming on YouTube as well. But here's the thing: look at SMR. Last quarter they did 400,000 of sales, but now it's 34 million. So I like that their sales just jumped up, but I'd be a little careful. They're losing a lot of money, 180 million net income loss right there. Actually, if I was looking for a nuclear stock, let me go to the nuclear port. Wait, you said ticker symbol SMR. Let's see if that's on here. It is on here, NuScale Power. They're only a $1.7 billion company. I kind of like I like a CEG, like a Constellation Energy. That like I'm biased because I own that one, but yeah, I'm down 13% on this stock. They actually have the most nuclear reactors out of any other company, out of any other publicly traded company. So this is the largest nuclear pure play. I'm still confused on how Reddit makes so much money. I think it's just like through advertising fees. I'm not too sure how Reddit makes all its money. That's something I'm not gonna question. I'll just own the stock there. But yeah, their sales growth was incredible. Y'all saw that on Reddit. So anyway, thoughts on ASML? Yeah, or ASML. This is like the chip making machine. So they have 3 main customers. It's Samsung, Intel, and some other one I forget. But here's what's so cool about them. In the most recent quarter, they made a record net income, 2.8 billion of net income. They've never made more net income than that. So they just had a record quarter, but the stock's at like a record low. What's up with that? So this is one I think is probably oversold. They have a nice dividend. They're an EU company, I believe, but so I don't know if tariffs will hurt them, but yeah, I do like that company. I think it's probably oversold again. Not financial advice there. Ooh, here we go. Pan W. That's a great cybersecurity stock. So cybersecurity is kind of recession resistant. AI is getting better, hackers are getting better, so people still got to spend on their cybersecurity. And Pan W is one owned by Nancy Pelosi. It's 1.9% of her portfolio. And check this out. I love subscription model companies. And look at this, 55% of the revenue comes from their subscription. And look at the growth here. It's phenomenal. It's up 25% to a new record. So incredible subscription growth. What about their support revenue? It's up 8%. So nice. But the best part is here, they're making net income every quarter. Yeah, hey, this Simon, this brokerage, this if you want to get this brokerage, it's in the link tree in my bio. It's the first link there. But look at this, they're making net income every single quarter. I love this. So anyway, yeah, the revenue is up 15% year over year, so that's a cool one. What's a good ETF I should buy into? Yo, in my opinion, I would buy ticker symbol VOO, the S&P 500. Again, not financial advice, but just breaks your money up for you into Apple, Nvidia, Microsoft, Amazon, all the top stocks by market cap, top 500. How much are you down? Yeah, ask me anything. I like being completely transparent, so check this out. Or I mean, we're up on the day, but I'm sure you're asking how much have we been down. Look at us year to date. We are down 15% year to date. I just like being completely transparent. I go on all the other TikTok streams. People don't show their portfolio. And hey, again, I don't sell anything. I don't have a course, book, WhatsApp, Telegram, Discord, but I do have a YouTube channel if you want to support me there. And yeah, here's this portfolio as well. I got multiple portfolios. Like look in the top middle, we're down $800 all time in here. So yeah, we're but we're up on the day. We're up 0.69%. So yes, sir. So let's see. It's yo ticker symbol X. Yeah, so this is U.S. Steel. So there's another steel company that I love. It might be Steel Dynamics. I don't know. So I actually don't like X that much. So and that's just because the net income sometimes go negative. So I mean, they're still making. If you average out the 4 quarters, they're still making net income every quarter. But the sales are down 15. They just sell commodity. I think it's like Steel Dynamics. I'd have to check my watch list. There's some other steel company that I absolutely love. Yo, Jeff Mack, if you ask me about it later, I'll find out what it is for you. But anyways, Tesla's still a buy. Let's check it out. TSLA. So the thing is, I don't love Tesla. Hey, thanks, user Angle. So the thing with Tesla is the valuation's still a little too high for me to buy. They're trading at 112 times net income, and look at they just reported their vehicles delivered. It was down 13% year over year. So they kind of lost their growth that their vehicles delivered. Actually, check out this. We can kind of see that. Look at their automotive business right here. The sales are actually down 5% year over year. So I don't love that. Tesla's not really growing anymore. But look at this right here, their energy storage business. It's 10% of the revenue, but it's like a hidden gem here. It's actually up 112%. So that's a cool part of Tesla that's really growing there. But I just really like to see them get back to growth because I feel like the growth is really slowing right now. And Elon's politics might be hurting the stock. I don't know. But anyway, let's keep going here. Ooh, let's see. SOFI. So yeah, this is SoFi Technologies. This is a fintech right here. They have their own banking charter. I do own this one, so I might be biased, but check this out. They do loans and look at their financial services revenue. This is what I personally love about SoFi. They're just a growing company. The sales are up 85% year over year, 250 million of sales now. It's really a significant chunk of their revenue now. Keeps on growing. And a lot of people didn't take SoFi serious. Look at this. They were losing net income every single quarter. But now SoFi's making net income every quarter. This is a profitable company making real profits now. And hey, I might be biased. I do own a little bit of them. Again, SoFi, I don't want to have a huge chunk of my portfolio in them just because they're so risky and so volatile. But yeah, I have 24 shares in them. Yo, I bought these shares literally. When was this? January 2023. So that was quite a while ago. Um, I haven't really bought any shares since. So what is STLD? Let's check this one out. Oh, Steel Dynamics. So this might be, yeah, Steel Dynamics. This is the steel stock that I love. STLD. They're on my watch list. So yeah, this is for sure the one. So yeah, if we check out this company right here, well, the net income is down 50% year over year. It's not negative, kind of like X was. And look at the stock price difference. This one has seen some nice stock price appreciation. So yeah, Jeff Mack, I like STLD um, as a as a steel play if I had to pick one. Let's see. Meta stock. Hey, what good to see you, dude. So yeah, here's Meta right here. I do own this one, by the way, so I might be biased, but here's why. Meta is such a great company. I love the fundamentals here. Like, look, the PE is a 21, so that's a fair valuation. 21 times net income for Facebook or Meta. Look at their active users. They have 3.35 billion daily active users. Yo, custom this app or this brokerage right here. If you want to get this brokerage, it's in the link tree in my bio. It's the very first link there. It is free. And look at the net income. It's up 48% year over year to $21 billion. So incredible net income growth on Meta. So and I love their active users. If they own Facebook, Instagram, WhatsApp, and the valuation's starting to be pretty attractive on them. So yeah. Um, so let's see. Oh yeah, red or green. What's up, dude? SIRI stock. I don't want to say the word. Let's see here. Dang, this stock price. Look at that. This stock has actually not done too good. So that's unfortunate. So Sirius XM. Yeah. So kind of, it's not really growing. Look at the business right here. So that's kind of the unfortunate part. Yeah, the sales are actually down 6% year over year. Pandora off platform, it's flat as well. So the business isn't growing, but if we go to the profits, they're pretty much making 400 million of net income a quarter. They had a one-time adjustment. Look at last quarter. That's not great. They lost 3 billion. What's the whole company worth? The whole company's worth 6.8 billion. So yeah, anyway, nothing's really blowing me away there. They're not growing their fundamentals, but I think they have a nice dividend yield. I think you buy that one for the dividend. You bought the Meta dip. Yo, nice, man. So here's ticker symbol. Here, I'll show you my position on Meta. I own them in my main taxable account right here. I have 4 shares of Meta. Look, we're only up 2.5%. So I pretty much bought it today. The pre-market, this was a $469 stock. It's had a nice little recovery. It's up like 6% since then. Oh yeah, here's my taxable account. This is my dividend only portfolio. So all these stocks in here actually pay a dividend. Um, Here's also my Roth IRA. I have a Roth IRA with Robinhood. I got Kroger. I just got 2 stocks in here, Kroger and Innodata. That's a fascinating company, Innodata, if anyone wants me to go over them. But, oh, Palantir. Yeah, what up, Bill? So PLTR, let's check it out. Yeah, I'll try and get to all the stocks here. My fault if I don't get to them. So I love Palantir because they have no debt whatsoever. Palantir is a debt-free company, and the government just hands them out money. Literally every single police station uses Palantir pretty much. Look at this. It's up 41% year over year. So that's some incredible, you know, growth of the government revenue. What's the app for dividends? This app right here is called Robinhood. If you want to get this app right here, this brokerage, oops. Yeah, this brokerage right here is called Robinhood. If you want to get it, it's also in the link tree in my bio. It's the second link there. So yeah, they're a cool one. I have my Roth IRA with them. But anyway, this is their government revenue. Government revenue's at a record. Same with their commercial revenue. With like S&P 500 companies, the commercial revenue is up 31%. So incredible. And they have a monster balance sheet because they have no debt. So yeah, I got rid of the Build-A-Bear stock. I did. I replaced it with Kroger. So, okay, so someone said, "Why'd you buy Innodata?" See, if we go back to my Roth IRA right here, I actually bought a lot of this stock this morning. If I go down here, this was April 7th. This was this morning. I bought 5 shares this morning of this stock, and I'll show you why. Again, not financial advice. Don't just follow me into this one. Always do your own research, and I'm not an expert. Um, so check this out. Here's what I love about Innodata. Y'all aren't gonna believe this. Look at their digital data solutions revenue growth. This is what I look for in a company. It's up 161%, literally to a new record. Five of the Magnificent Seven use their software. Meta, Apple, Amazon, Microsoft, and Nvidia all use this company's software. Look at their agility revenue. That's up 25%. And they have no net debt. They have no net debt to net income. They used to lose net income. Now they're making net income every quarter. So anyway, I love the just growth of INOD. And they've had some crazy stock price appreciation though. So check this out. Companies with insane growth usually have insane stock price appreciation. So it's kind of tough to buy this one because look, the stock is up 3,800% in 5 years, but I'm down 6% on it. So you could technically get in at a lower cost basis than me. But again, not financial advice. Go do your own research. I just love. I think that one's at a good valuation. What app? Oh, hey, all these apps I'm using are in the link tree in my bio. Not sure which one you're talking about, but this one right here is the first link there. Let's see. What's the best dividend stock to own? So that's, I don't know if you mean for the highest yield possible, but like, for example, Google. Google pays a dividend, super safe. But you're probably talking about a high yielding dividend stock. My personal highest yielding dividend stock is ticker symbol Cube right here. This is Cube Smart. If we go to the dividend, they have a 5.5% dividend and it's completely sustainable. So that's one that I own here in my Moomoo portfolio. Yeah, this brokerage, this app right here, Naham, is a Linktree in bio. First link. It's called Moomoo. If you want to get it, check out UPS. Yeah, what up, Eric? So UPS, this company is another high yielding dividend play. But the thing is, you're not going to outperform the market owning a UPS. So look at that. They've slowly just kind of bled out their stock price. But here's what's kind of cool about them. You get a 7% dividend. But look at the payout ratio. The payout ratio is getting a little high at 96%. So I, I need to do some more research on this company. Let's see, net income. So they're making 1 to 2 billion of net income a quarter, but look at that. It's under 2 billion if we zoom out. I remember, look at this. This company, wow, they used to make like easily over 2 billion a quarter. So anyway, they've kind of just lost their growth, but they're not terrible because they're still making net income. They're still making money. Poor Build-A-Bear, yeah. Um, yeah. I still really like that company. I might consider buying back into them. What all positions? Yeah, hey Alex, if you go to my YouTube channel, it's called Nathan Robert. It's also in the link tree in my bio. I just did a whole entire stock portfolio update, so you can see every stock that I own and my taxable account, my Roth IRA, all my dividend income as well. If you want to check it out, it's on my YouTube channel called Nathan Robert. Link tree in bio. Um, Let's see. Yeah, if you guys got any stocks you want me to look at, let me know. We'll check them out in the chat here. So someone said VST. So you think INO Day is a good buy? Now I think so. AUS, not I bought a little bit this morning, but not financial advice. Here's VST. This is Vistra Energy. This is another nuclear energy stock. They own like 25 nuclear reactors, I believe. So the PE is a 14, so they're trading at a pretty fair valuation. And look at the net income. It used to. Well, look at that. Actually, if you average out the 4 quarters, they're making a lot of money. Last quarter, they made 1.8 billion. I mean, that's incredible. And we can kind of see they're in Texas West. So yeah. Anyway, VST, I do like them. I kind of own their competitor. I own a Nvidia's pumping today. So I own CEG. But yeah, let's go check out Nvidia. What's up, dude? So yeah, what up, Johnny? So yeah, Nvidia's up 1.21% on the day. Let's do some quick analysis on them. So here's their PC GPU market share. 18% market share for GPUs. Their automotive business just keeps on growing. It's at a new record, which is incredible. And so is the bottom line. 22 billion of net income just in the most recent quarter. I mean, until that growth goes away, I think Nvidia's a buy. I certainly wouldn't be selling out of Nvidia. Yeah, hey, this app or this is a brokerage right here. If you want to get this brokerage, HFK, go to the link tree in my bio. It's the first link there. And also, here's another cool thing. So we were just looking at Nvidia. Nvidia owns some individual companies as well. So Nvidia owns ARM, APLD, and WeRide. Look at this absolute pump and dump. So you got to be careful. Don't just buy a stock because Nvidia does. It just It's at an all-time low today. But Nathan, do you think the U.S. has production? What up, IRS? We got the IRS in here. What's up? Yeah, dude. I hope so. Oh, T-Mobile. Yeah, let's check out T-Mobile, TMUS. So I wouldn't buy Verizon or AT&T. I'd buy T-Mobile because you won't believe the bottom line growth here. So look at this. The valuation is honestly fair. 25 PE for T-Mobile is fair, but look at the net income. It was 48 or it's up 48% to 3 billion. You know, they own Mint Mobile. Y'all see the Ryan Reynolds like Mint Mobile ad? It was genius. You know, 3 billion of net income for them. So I actually really like T-Mobile. The valuation and the net income growth. They're doing a crazy dividend growth and stock buybacks. Yeah, that's a good dividend growth company. So yeah. Oh, so someone said SoundHound AI. What up, Tony? Said SoundHound AI. So there's some good news and there's some bad news about this stock right here. So check this out. Here's the good news. It's their incredible subscription business. So check this out. Their subscription service revenue literally a year ago was like 400,000. It was nothing. Well, now it's 30 million just in the most recent quarter. That's incredible growth. You know, at this growth rate, what's it going to be this time next year? But you still got to be careful because they're a money losing company. I don't know how they did, but they just lost 250 million of net income. So the cash from operating activities was negative as well. I'd be careful about that. So I wouldn't put a huge chunk of my money with them. Where can I see Pelosi? Yeah, if you go to the Discover tab, if you go to the link tree in my bio, I have a tutorial on how to use this app. But yeah, you can see like Nancy Pelosi stocks. You know, she's been buying some weird stuff like Interactive Brokers, PayPal, Comcast, Disney. Pan W is a cool one. And someone said Visa. Yeah, Visa. Yeah, this is a brokerage right here. If you want to download it, it's in the link tree in my bio. It's the first link. It's called Mumu. But anyway, here's ExxonMobil. It's free. But here's ExxonMobil. This is a great oil and gas company if you want exposure to like oil. And look at that. With oil stocks, you usually have nice dividend yields. This one has a 3.8% dividend, and you won't believe how much net income this company makes. Check this out. They literally make like 8 to 9 billion of net income every quarter. So they just print net income. It's really impressive. So yeah, you get the nice dividend and exposure to oil. You know, oil does good if there's inflation sometimes. Whenever there's war fears, oil usually does good. So maybe it's nice to have a little bit of exposure to them. Let's see. Energy Transfer. Yeah, that's ticker symbol ET. I would personally stay away from this. This is one of the very few companies that pay you a K1 tax form. So if you buy this stock at the end of the year, you'll get this weird special tax form that I didn't know. I bought a company similar to this. They sent me a K1 tax form and it costed me $300 with an accountant to get it filled out. But because they're a MLP that gives you a K1 tax, this technically isn't a stock. It's a master limited partnership. You're technically a partner in the company. Because they're that way, you get an 8.10% dividend. So you get an incredible dividend, but I personally don't like it for tax complications. I'd stay away. Um, can you check VFS? Let's see, VFS. So again, not financial advice. Do your own research. This one looks really risky. Yeah. $6.3 billion company. Let's see. So what market are they in? So this is completely a Vietnam company. 97% of the revenue comes from there, but they sell automobiles, e-scooters. So yeah, it's one of those kind of companies. But oh yeah, look at that. It says they lost 13 trillion. So we'll switch their revenue. Oh, we can't exchange it. Oh well. Anyway, I would probably stay away from that one. Just got Amazon. Yo, Oswaldo, that's what's up, dude. I also own some Amazon. You got in at a better cost than me. I'm down 7% on my Amazon, but I absolutely love Amazon. Yeah, hey Luke, if you want to get this app or this brokerage, it's in the link tree in my bio. It's the first link there. And here's what I love about Amazon: the net income is crazy. They made 20 billion of net income just in the most recent quarter, so they're really growing their net income. And look at their Amazon Web Services, like just this segment of business. You know, not even including their online stores. Just their Amazon Web Services business is up 19%. It's over 100 billion of annual revenue for them. So Amazon just a great growth company. You know, they own Zooks, they own Whole Foods, they own Twitch as well. You know, they own Twitch. So let's see. Uh, yeah, what up, Glenn? What do you think about Rolls Royce? Yeah, so yeah, did y'all know Rolls Royce was publicly traded? So RYCEY is their ticker symbol. And this app is telling me there's a little double top there. Anyway, Rolls Royce is really an aerospace company. A lot of people know Rolls Royce for like the cars, but they're really an aerospace company. They sell engines for jets and stuff. So that's what's kind of cool about them. They've seen a nice recovery. They made 3 billion of net income in 2024. So they've really turned things around and their stock price is growing like crazy. So yeah, Rolls Royce is publicly traded. I think they're an ADR though. Yo, Nerd said NU Holdings. I really love this. I really love this stock. So this is actually a crypto bank out of Brazil. So it is exposed to crypto, but they're a crypto bank. but I love the net income growth. The net income was 500 million in the most recent quarter, up 53%. So incredible net income growth. So and sales growth. Yeah, hey Strawberry, what app is this? Yeah, this is actually a brokerage. If you want to download this brokerage I'm on right here, it's in the link tree in my bio. It's the first link there if you want to get it. It's a free app. Let's see. Can you look at? Oh, this one looks risky. IESC. Let's see. So, hey, if y'all want to support me, I'm streaming on YouTube and TikTok right now. So, I appreciate y'all on the TikTok stream. I don't know if TikTok's gonna get banned or anything, but I'd appreciate if y'all subscribe to my YouTube channel. But here's IES Holdings. So they're a $3 billion company. So they're in residential communications. So, what about the bottom line here, the net income? So, yeah, the net income's growing very nicely, up 32%. So they're making like over 200 million a year of net income. What's the PE ratio? The PE is a 15. So actually, I really like this company. The valuation's fair. They're growing the bottom line. So yeah. Yeah, Tony, you're right. Warren Buffett does own some in-use stock. So, let's see. TQQ, is that a company? Um, or do you mean TQQQ? So this is the triple nat. This is a super leveraged ETF. It's a triple leveraged ETF. It's super risky. So literally this was $90 and now it's, 38. So basically whenever the Nasdaq goes up 1%, this goes up 3%, but also if it goes down, then it goes down 3%. So there's a risky one. They're a good thing to trade. You don't really want to buy and hold shares of that one. You just want to trade it. So what is AREB, please? What is this one? So American Rebel. So if you look at the top right, this is like a classic. Please avoid this company. Look at the top right, the market cap. This whole company is worth $6.5 million. That is like scary. The whole company's worth 6 million. The sales were 2 million, down 30%. They're losing net income. So they have more liabilities than assets now. Please stay away from that company. It looks extremely risky. So yeah, again, not financial advice. I've lost a lot of money on a stock too. So I'm just trying to warn you. That one looks super risky. Yo, Misi says I'm buying HLAL. Let's see if what this is an ETF right here. Let's check them out. So yeah, they have kind of collapsed recently. What are their top holdings though? So they own Apple, Microsoft, Meta, Google, Tesla, ExxonMobil. So hey, this is maybe like a alternative S&P 500 ETF, but hey, they've done pretty good since 2019. I wonder what the fees are, the expense ratio. So they only have 500 million assets under management. Uh, let's see. Check out CBA. So what's this one? Wait, which one are you talking about? Champion Bear Resource or Combank? Let me know. Oh wait, CBA, Commonwealth Bank. Okay, we found it. So this is an Australian company. So this is on the Australian Stock Exchange, so we'll switch their currency to US dollars. The PE is a 25, so the PE ratio is fair. Retail banking, they're in New Zealand. What about the net income? So yeah, look at that. They're making, wow, a lot of money. I mean, the net income is down 1%, but I mean, still, it's like a lot. Nice. I can see why they're doing so good. Hey, oh, hold on. Yeah, try not to spam here. There we go. Had to fix that. Let's see. Let's see. Check out SUME. Let's check it out. SUME. So Summer Energy Holdings. Yeah, dude, this is a $27 million company. There's no volume. I mean, look at these candles. Please don't buy this stock. It's barcoding. Yeah, there's nothing good about this stock right here. I mean, I hope you can make money on it, but that one looks really risky. I would just avoid that one. Yeah. Oh, here's a cool one. ARCC. So yeah, this is Ares Capital. This is actually a BDC, a business development company, and literally by law, they have to pay out most of their income in the form of dividends. So check this out. If we go to the dividend yield, they have a 10% dividend, and it's completely sustainable because they have to pay it out by law. To avoid taxes. So that's actually a higher yielding dividend stock that's sustainable. But because of that, they pay an unqualified dividend. So the dividend, when you receive it, it's actually taxed at the highest possible tax bracket. Glenn said Rocket Lab. So this is a cool company. This company sends rockets into space, and they actually have a backlog of $1.3 billion of orders that they haven't fulfilled yet. So they have a huge backlog of orders. And check out, this is what's really impressive I look for in a company. Look at the growth. The sales are up 75%, literally to a new record. So this is incredible growth, but you still got to be a little careful. They are burning net income right now, but they can kind of grow out of this. Yeah, they're losing like 50 million a quarter, but that's all right. What do you think about the airlines? Yeah, I would just stay away from the airlines. Like my favorite airline, if I had to pick one, is DAL. This is the best run airline in my opinion. The financials look the best out of all the other ones. I've compared it before, but I still just don't like the airline industry. Like if we go into a recession, people just won't fly. I mean, and plus their stock, they don't really appreciate much. You know, with the airlines, you're not going to outperform the market in the long run. It's down since 2019. So yeah, I would just probably avoid the airlines. It's kind of they're just too boring. They're federally regulated. What app you using? Hey, this is a brokerage right here. If you want to download this brokerage, it's in the link tree in my bio. It's the first link there. Yeah, you can track like Buffett's portfolio, Kathy Wood. Someone said Robinhood stock. So Robinhood, that's a classic Kathy Wood stock. And I actually really like Robinhood, and because of their growth. So how many? They have 25 million funded accounts, but look at the sales growth. This, or actually, let me look at it down here so it's better. The revenue is up 115%. The revenue is over $1 billion in the most recent quarter. So the growth of the revenue is crazy, and same with their bottom line. If we zoom out, Robinhood used to lose net income every quarter, but now they're making net income every quarter. So yeah, Robinhood's a very nice one. Yeah, hey, SEE, this is a brokerage. If you want to download it, it's in the link tree in my bio. It's the first link there. It's called Moo. Someone said thoughts on Dollar General. So DG. So yeah, the dollar stores have done pretty decent the past couple weeks here. Look at this. You know, a lot of tech stocks are down bad, but Dollar General's done pretty good because they're kind of like a recession resistant play. But also they are down bad since 2021. You know, and that's because they really lost their margin. So check this out. This is kind of the sad part. If we go to their net margin right here, you know, if we zoom out, they used to have a easy 5% net margin, but now it's down 50%. They only have a 1.86% net margin. The net income, they're still net income positive though. They're still making like 200 million of net income a quarter, but yeah, it's down 52%. They're decent though. I don't know if you'll outperform the market owning that. How do you try? Yeah, you just go to the Insights tab. Yeah, I have a tutorial on how to use this app. You just go to the Discover and then Insights. Yeah, you can see like Warren Buffett's top holdings. You know, he has a lot of the higher yielding stocks like a Chevron, Coca-Cola, Apple. Yeah, we can see like Nancy's portfolio as well. So anyway, oh, here's a cool one. GATO said TSM. I really love Taiwan Semiconductor. So check this out. This is like an NVIDIA competitor. They make the 5 nanometer wafer chips. They're pretty much in everything. Like probably your car window has like a Taiwan Semiconductor chip. So they have their market share keeps on growing, a 64% market share. And check out the bottom line. This is like the best part. They made 11 billion just in the most recent quarter. Another 11 billion the quarter before. They make so much money. I don't know if there's like geopolitical war fears with this one, but they have a 1.6% dividend yield, 33% payout ratio. So yeah, let's hope they don't get invaded. mm. So what's up? HPG. What's this one? HPG. So this is what are you talking about, the Australian company? Hi, I don't know if that's the one you're talking about. That's a last time I checked, tariff made. What up, Chad? How's it going, man? How low do you think Apple can go? So, dude, Apple is down bad. They're really getting hurt on this tariff news. So check out Apple. You know, this is Nancy Pelosi's largest holding. Same with the Buffett's, his largest holding as well. But yeah, look at them just the past week here. This is not good. You know, this was a $220 stock, and well, now it's 176. And I do like Apple, by the way. Like if we go to the metrics right here, we can see their smartphone market share. Apple actually has a 23% smartphone market share, which is really impressive. But this is why Apple's fallen. A lot of Apple's revenue comes from outside the US. Like, look, they're in Europe, they're in China, they're in Japan. So only 36% of the revenue comes from the US. So that's why I think Apple's fallen. But I love the fundamentals there, you know. Oh, so yo, what up, Jesse? He said EL stock. So this is Estee Lauder. This is a beauty company. They like sell makeup and cosmetics and stuff. So this industry, we might have to move. I might have to reset this app real quick because my Wi-Fi is working fine. So here's East State Lauder. Yeah, if we look at them on the weekly, this is really scary. So they kind of just lost their growth. So yeah, if we look at what they sell, you know, they're in skincare, makeup, fragrances, like perfume or whatever. But check this out. Look at their net income. They actually went net income negative. They lost 600 million in the most recent quarter when they used to make a lot of money. Look at that. They used to make so much net income every quarter. So it's really weird to see them lose a lot of money like this. So I'd be careful with them. I think them being at this low price is probably justified. I'd just be really careful with that one. Um, Healthcare stock. What up, Johnny? Um, Realty Income. Yeah. So actually, if we go to Realty Income, This is a monthly paying dividend stock, by the way. So check this out. If you're looking for a monthly paying dividend company, this company's in the S&P 500. They do triple net leases. They're a real estate investment trust, and they pay you 26 cents every month. So yeah, you get a 6% dividend, pays monthly. They're all right. You won't outperform the market owning that kind of company, but you get the nice monthly paying dividend. It's since they're it's an unqualified dividend, so you do pay a bit higher tax on the dividend. But yeah. Volvo Cars, is Volvo public? Oh, yo, Chris said JP Morgan. So, yeah, what up, Chris? So, JP Morgan, this is a great bank. Y'all aren't going to believe how much net income JP Morgan makes. If you have a guess, go ahead and say it because they literally make over 10 billion of net income a quarter. I mean, that one quarter they made 18 billion, 14 billion. So this company makes on average like 14 billion of net income a quarter. And it's crazy. They just pay out a lot of that in dividends and or not even a lot of that. Look, only a 25% payout ratio, 2.3% dividend yield. What's the name of it? Hey, G Eagle, this is a brokerage. If you want to get this brokerage, it's in the link tree in my bio. It's the very first link there. It's a free app. So let's see. How about Tempest AI? Yeah, that's a Nancy Pelosi's husband was buying Tempest AI. So let's do some analysis on them real quick. This is a very niche company. Check this out. They're in the genomics industry, and look at the sales growth here. This is kind of impressive. The sales are up 30% year over year, so that's nice. But look at their data and services business. This is up 45%, so that's seeing some really impressive growth on TEM. So I do actually I do like them, but um think they're getting hurt. Are you buying and holding? Yeah, dude, I'm just buying and holding shares right now. Yeah, here are the stocks that we own in here. Yo, here's my main taxable account, by the way. I haven't showed this in a minute. So yeah, we are down 0.33% on the day. This is my dividend only portfolio. I mainly just own dividend growth stocks in here. And look at us year to date. We're down bad, by the way. I just like being transparent. You know, I go on all the other streams. No one else like shows their portfolio like this. But yeah, we are down 15% year to date. Here's my total percent change on every stock. We're now red on Google, United Rentals, CEG. Oh yeah, we also have our Roth IRA with Robinhood. We kind of just started our Roth IRA less than a year ago. It's only $600, but these are the two stocks we got in here. Let's see. 401. I don't have a 401k. I have a Roth IRA though. Ooh, Ivan, what's up, Ivan? Yeah, here's a really cool stock. This is Broadcom. I haven't looked at them yet, and this is like another Nvidia competitors because a lot of people know them for their semiconductor solutions. But here's the hidden gem on AVGO. Look at their infrastructure software revenue. This is where it starts to get ridiculous. Literally, it was 2 billion a year ago, and now it's 6.7 billion. This is incredible growth. You know, up 50% year over year, and on top of that, look at the free cash flow. The free cash flow was 6 billion in the most recent quarter, up 29%. Net income was 5.5 billion. They had a little one-time adjustment there, so that you want to look at the operating profit. So this is a very consistent company. Yeah, no problem. Yeah. Thanks for showing up to the YouTube live stream. Yeah, we're streaming on YouTube and TikTok right now. If y'all want to support me from TikTok, make sure to go over to my YouTube channel. I'm streaming on there as well. If you missed anything, you can replay it. Yo, Crystal, thanks so much for the dino, for the gift. I really appreciate you. What's up? Why not invest in crypto on Robinhood? Hey, I just don't own any crypto right now. I mainly love the like dividend paying companies, companies that pay me back money just for owning them. So user 13 said Pan W. So that's a cybersecurity stock. I actually really like the cybersecurity industry. Like if we go into a recession, people still got to spend on cybersecurity. And I love subscription model companies. Check this out. Their subscription revenue on a quarterly basis, it's up 21%. This is incredible growth for their subscription business. And on top of that, hey, thanks, Jesse. And look at the net income right here. They had a little one-time adjustment making their net income 1.7 billion, but because that's why it says it's down 85% year over year. But yeah, they're making 2 to 400 million of net income every quarter, and the free cash flow is even better. Where do I find your info? Yeah, hey, if you want to go to my YouTube channel, it's called Nathan Robert. It's also in the link tree in my bio. By the way, I don't sell anything. I don't have a course, book, WhatsApp, Telegram, Discord. This is my only account. I only have this one TikTok and my one YouTube channel. So yeah, watch out for people impersonating me. I really appreciate y'all. Yeah, if y'all want to hit the follow button, I literally go live every day, twice a day. We just look at stocks. We're going to be live for sure later today. So anyway, here's Elf Beauty stock. This is another beauty and cosmetics company, but here's why the stock has been hurt so recently. So there's good news and bad news. The good news is the sales growth. The sales are up 31%. So the sales on Elf Beauty is incredible. This is a real growing company, but here's the bad news. If we go to the net income right here, so the sales are up 30%, but the net income is actually down 35%. So what does that mean? They're actually losing their net margin. So the net margin was only 5% in the most recent quarter. So yeah, they're kind of down bad right now. Yeah, hey, this TikTok account I'm on right now has been literally permanently banned 5 times. I kid you not. I've been banned 5 times, and I'm scared it's gonna get banned again and not appealed. It's been unbanned 5 times. But so yeah, if y'all want to help me out, subscribe to my YouTube channel. It's in the link tree in bio. It's called Nathan Robert. Um, Anyway, let's keep going here. Check out SAA. I'm not sure what that SAB. Let's see. Oh yeah, this is like an ADR company. I'm not sure what they do. They've just seen a lot of stock price appreciation recently. I'm not sure what country that they're in. What do they do? So they're in surveillance, aeronautics, dynamics. Ooh, I don't want to pronounce that word. But I don't know what that is. But hey, it seems niche. They're making a lot of net income. Cool. What? Oh, hey Brian. Hey, this is a brokerage right here. If you want to get this brokerage, it's in the link tree in my bio. It's the very first link there. If you want to get it. Hey, Relaxo, no problem, dude. Thanks for the follow. What are your best dividend payers? So yeah, my highest yielding dividend stock. Oh, it's not Amazon. It's CubeSmart right here. Mine personally, this is my highest yielding company. You can kind of see where I bought them. I'm down 10% on the position, but this company actually has a 5.5% dividend yield, completely sustainable in my opinion. Not financial advice. I've done so much research on them. They're kind of like a realty income. They're a real estate investment trust. So let's see. PBT. What's this one? Yo, what up, Joe? He said, "Oh, this is the Permian Basin Royal Trust. So they own basically oil wells, and they collect a royalty every time it goes through or whatever. But literally, this company just pays out all its money to you as a dividend. But they just don't make much money, like 3 million of net income. Like the revenue is the same as their net income because it's all high margin. But anyway, I would just avoid this one. I mean, nothing's really blowing me away here. 3 million of net income and it's declining, so I'd be careful. SA is a car company. They make fighter jets. Oh, thanks for that, Tickla. I appreciate you, man. What do you think about military industry? My favorite military stock. I like. It's not Lockheed Martin, but Lockheed Martin's a great honorable mention. I really love Lockheed Martin. They're so diversified. They're in aeronautics, they're in rotary, they're in missiles, so space. So Lockheed Martin also has a nice dividend. You get a 3% yield with Lockheed Martin, nice payout ratio. But I like GE Aerospace. That's really my favorite one. GE Aerospace. Would you recommend Nvidia to buy? So let's go check out Nvidia stock. Me personally, AJ, I really like Nvidia right here. Not financial advice, but I honestly think, yeah, now's a good time to dollar cost average into them. They have a huge GPU market share. With NVIDIA, you actually get an 18% GPU market share. Their automotive revenue keeps on growing. They partner with GM and Cadillac and WeRide, and the bottom line keeps on growing. The net income was 22 billion just in the most recent quarter, and to be honest, until that net income growth goes away, I think this one's still a pretty good buy. Um, and Nvidia also owns some like individual companies. So check this out. If we go over here, we can see Nvidia owns like ARM, APLD, Nebius, and WeRide as well. That's kind of where they're partnering with their cars. But anyway, that's their automotive revenue. Let's see. Go to crypto. What up, Dot? How's it going? Now, let's see. Palantir, yo, dude, Relaxo, dude, I love Palantir. So check this out. Palantir is a debt-free company. They actually have no debt whatsoever, which is pretty cool. And most of their revenue actually comes from the government. What happens is, hey, this is actually a brokerage right here, Relaxo. If you want to get this brokerage, it's in the link tree in my bio. It's the very first link there. But look at the government revenue right here. It's crazy. The government revenue is up 41%, literally to a new record. So this is incredible government revenue growth. So many police stations use them. Same with the commercial revenue. Commercial revenue is up 31%. So Palantir is just a great growing company, and they have no debt whatsoever. Palantir is a debt-free company. They're on my debt-free watch list. Yeah, every stock in here actually has zero debt. You've probably heard of some of these before, like a DocuSign, Sprouts Farmers Market, Duolingo. Yeah, did y'all know Duolingo was publicly traded? Y'all aren't gonna believe this. If this doesn't impress you, hit the dislike button. But look at this. The subscription revenue is crazy. It is up 48%. So a ton of people are on Duolingo subscription for some reason. They have advertising revenue, in-app purchases. So anyway, the free cash flow is ridiculous. That's what FCF stands for right here. So the free cash flow is 80 million in the most recent quarter. The net income is positive, no debt. So Duolingo is a cool one. Um, would you say AMD is also good? I am down bad on my AMD position. Let's pull them up real quick. So I do own some AMD, by the way. So check this out. Where is our cost basis on here? So yeah, look, we own 12 shares at $124. So our average cost on AMD is at $124 a share. But I will show you why I do like AMDs. They're kind of like an NVIDIA competitor. Um, Yeah, so check this out. We can see their PC GPU market share. They actually have a 17% GPU market share, but actually, they're a big data center play. Check this out. So a lot of AMD's revenue now comes from their data center business. And look, it is up 69% year over year. That is incredible growth of their data center business. Same with the client revenue. The client revenue is up 58% year over year. So AMD is just a great growing company, in my opinion. The free cash flow was a billion. They had a one-time adjustment to their net income. So their operating profit was also over a billion at a record. No net debt either. So great. Um, Yo, what up, Pawn Surprises? How's it going, dude? Um, AMD is down bad. Yeah, so is my position. Oh, SoFi. Hey, y'all want to look at SoFi? I do own this one as well. I'll be really quick about them because we've gone over them a few times. But SoFi is a fintech. You know, they have their own banking charter, which is like impossible to get now. But look at their financial services revenue. This is the main, most impressive part. It's literally up to a new record, up 85%. So that is some very nice growth on SoFi Technologies. And people are starting to really take them serious now. Look at this net income. If we zoom out, they used to literally lose net income every quarter. They were burning money, but now people are starting to take them serious. SoFi is actually making a lot of net income every quarter, so that's what I like about them. Do people choose AMD over Nvidia because they're less constant? I'm not sure, Sermon. Um, let's see. I just bought some of it. Yo, someone said they just bought some Realty Income. Yeah, Akad, what's up, dude? Yeah, Realty Income. This is a monthly paying dividend company. This is a real estate investment trust. They do triple net leases. A lot of people like them because they pay you a monthly paying dividend. So for every share that you own, you get 26 cents every month per share. So basically a quarter. So 6% yearly yield on Realty Income. They're a REIT, a real estate investment trust. So they pay a non-qualified dividend. So, hey, what up? Smile said, should we buy more Uber? I absolutely love Uber. So, and I think they're at a pretty fair valuation. So check this out. I'll give you my honest thoughts on them. Look at their active users. They actually have 171 million monthly active consumers, which is pretty cool. But here's the best part. Their business is still growing. Look at Uber's mobility revenue. It's up 25% year over year. Some incredible growth there. And also their delivery revenue, because they do like Uber Eats. That's what this is. It's up 21%. So Uber's a great growth company. Not financial advice, of course, but look at their FCF, which is free cash flow. They're making so much free cash flow. They can do dividends, stock buybacks, M&A with this money, anything they want. They're net income positive as well. So Uber is one that I really like. Um, so yeah. Let's see. VTI, I think that's an ETF right here. So yeah, this is the Vanguard Total Stock Market ETF. So yeah, this owns I think every stock, but just like a little like based off their market cap. So if company like Apple's the largest holding because they have the largest market cap. So the higher the market cap, the higher. Uber's not profitable. Uber is profitable. Uber is making a boatload of money. They actually are. They're net income positive and free cash flow positive. Boom. I just looked. So anyway, let's keep going here. Trade Desk TTD. So yeah, this is an advertising company. I think it's oversold right now. The reason they fell so much, they had a great quarter, but unfortunately they lost Netflix. Netflix used to use the trade desk to find advertisers, but now Netflix just does it themselves. But I love the company's numbers in the most recent quarter. The revenue was up 22%. The net income was up 87%. They really grew their net margin. Their net margin was up 25%, which is very impressive. So yeah, I do like the trade desk. I think it's oversold. What's the app? Oh, hey, this is a brokerage right here. If you want to download this brokerage, happy. It's in the link tree in my bio. It's the very first link there. It's free if you want to get it. Let's see. Oh, Tempest AI. So yeah, TEM. This is. I'll be quick because we just looked at them. But Tempest AI has honestly had a pretty fair valuation. The stock has been flat. I mean, they haven't been public for that long, but they're in the genomics industry. So check this out. Their genomics revenue is up 31% year over year. So they're seeing some nice growth on the genomics revenue and the data and services business. The data and services is up 44%. That's the real winner. That's some very nice growth. Oh, Heather T. Thank you so much for the rose there. I really appreciate you. Yeah, if you got a stock you want to look at, I'll check it out. So, oh, here we go. HIMS. So yeah, this is hims and hers right here. Yo, we'll look at Shopify as well. I love that one. So yeah, here's hims and hers. This is another debt-free company. So this is a company that has no debt whatsoever. Here's the best part. If you go to the sales right here, I don't understand. Um, Oh, here we go. So the revenue is up to literally to a new record. You can't make up this growth. It's up 95%. So that's some very nice growth on Hims, sales. And on top of that, if we look at the free cash flow, they're making free cash flow every quarter, net income every quarter, and they have no debt. So I do like this company. But the reason they've fallen so much is I think they can no longer sell their weight loss prescription. They like the FDA doesn't allow them to sell it anymore. It was something like that. I need to do some more research on that one. So anyway, let's keep going here. IVR. Oh, I want to look at Shopify as well, but let's look at IVR. So this is Invesco Mortgage Capital. So yeah, this is. Ooh, look at them. This does not look pretty. What's the dividend? So yeah, I'd stay away from this company. It's one of the mortgage REITs. They have a 23% dividend. It's probably not sustainable. Let's see. So yeah, the net income, it's kind of just really choppy here. You know, yeah, the sales were 8 million in the most recent quarter. The sales even went negative that one quarter. I don't even know how that's possible. I just would stay away from that one. Anything promising a 25% dividend is probably unsustainable. So yeah, I'd be careful with that one. Let's see. What should I buy? Hey, not financial advice. If I was looking to buy something right now, I would buy QQQM. This is the Nasdaq 100. It's the same thing as QQQ, but with a lower expense ratio. It breaks your money up into all of big tech, all the growthier companies like Apple, Microsoft, Amazon, Broadcom, Meta, Costco is even in there, and Netflix. So yeah, I do like that one. Trump speaking soon. Oh, wait, really? In 40 minutes? I didn't know that. Ooh, here's a kind of recession resistant company. Check this out. This is O'Reilly. Did y'all know O'Reilly's Auto Parts? You know, kind of like the theme song. This the stock is done great. Same with AutoZone. They're a very impressive company. But yeah, if we look at the business, you know, it's just growing like single digits now. It grew 5% year over year, but the stock price just keeps on going up because they are buying back their own stock like crazy. So yeah, they pretty much make 2 billion a year of net income. They don't pay a dividend, but they do insane stock buybacks. What are some companies beginners should be looking at? Hey, not financial advice, of course. I think Google is a great, you know, if you're for a non-ETF, if you're looking for individual stocks, Google, you can't go wrong holding this fantastic company. The valuation is super fair. They're literally trading at 18 times net income. So that's a really low valuation. You also get a dividend, a small growing dividend right here, and the net income's at a new record. Net income's up 28% year over year. They're growing their net margin. The net margin grew 15%, which is the most impressive part, actually. They own Android, they own YouTube, they have the Google Cloud, they have their own quantum chip, they own Waymo. Look at just the Google Cloud revenue; it's up 31%. So anyway, Google's a great growth name. I like them. The valuation's fair. Felipe, what's the app? Oh, hey, this is a brokerage right here. If you want to download this, it's in the link tree in my bio. It's the very first link there. Yeah, Tony, it's in the first link there if you want to get it. It's a free app. It's where I like to park my idle cash. It's a brokerage, but if you look in the middle of my screen, I got $500 of cash. Earns you the nice little yield. Let's see. Today's a great day to buy in. Yo, SK, I absolutely agree. Today's a pretty good day to dollar cost average into the market. Again, you want to make sure you're dollar cost averaging into a high quality company. Again, I'm not an expert. You could lose a lot of money on a stock. So make sure you dollar cost average into a high quality company. Like in Amazon, for example. I think Amazon is at a great valuation. You know, Amazon owns Twitch. They own, you know, they're so diversified. Like if you look at this right here, you know, 38% of the revenue comes from their online stores, third-party seller services, then their Amazon Web Services. Look at their AWS business. This is huge. It's literally over 100 billion of revenue for them now, and that's just one segment. Then they have advertising. They're in an advertising business now. They own Twitch. They have their subscription revenue, like Amazon Prime. That's reoccurring revenue. They have physical stores. They own Whole Foods. And look at the bottom line. The net income was 20 billion on Amazon. It's ridiculous. So you can't go wrong with Amazon, in my opinion. It's just so many businesses inside one. It's diverse stock. Um, yeah, hey Dylan, this is a brokerage. It's in the link tree in bio if you want to get it. Sorry if I'm sounding repetitive. Uh, let's see. Is SoFi a good broker? Yeah, I don't have SoFi, but I do own SoFi stock. I do like SoFi as well. I'm gonna DCA in Google. Yeah, what up, Johnny? I think so. Yo, in BRC stock. Let's see. What is BRC? So this is Brady Corp. Yeah, sorry. I'll try and get to all the stocks here. So this is a $3 billion company. They're not that big, but they're trading at 16 times net income, which is pretty fair. Safety and facility, product identification, wire identification. This sounds very niche, actually. What about the net income over here? So the net income is down 7% year over year when the sales are up 10%. So that means their net margin fell 16%. Huh. I need to do some more research on this one, but I mean, they're still making net income every quarter. Ooh, do a review on Apple. Let's check out Apple. Yeah, let's do it. Yo, and good to see you, Not Fates. How's it going, dude? So yeah, Do I do no, dude, I don't do any consultations. By the way, I don't sell anything. I don't have a course, book, WhatsApp, Telegram, Discord. I don't have literally none of that. Watch out for people impersonating me. There's a lot of people doing that. The only thing I do have, literal only thing I have is a YouTube channel and this one TikTok I'm on right now. So if you want to support me, the best way to support me is just subscribe to my YouTube channel. I'm streaming on there as well. If you miss anything, you can replay it. And my YouTube channel is in the link tree in my bio. It's called Nathan Robert as well. But let's do some analysis on Apple right here. So they're trading at a 28 PE, historically a fair valuation. We can see their smartphone market share right here. So they actually have a 23% smartphone market share. Most of the revenue comes from their iPhone. Then they have their services revenue, wearables, Mac, iPad, but the services revenue is the real impressive part because whenever you buy something in the App Store, Apple takes a huge 30% fee on that. And this is why Apple's fallen so much. If you look at Apple the past week, they're down bad. This was a $225 stock literally 4 days ago. Now it's 180. That's because the tariffs are going to hurt them because they're so internationally diverse. Look at this. Did you know only 36% of Apple's business is in the US? Then 25% is EU. That's huge. 17% China. So they're in all these other countries as well. So yeah, I think that's why they're falling so much. But they're the world's biggest company. Hmm. Here's an interesting stock. Someone said TTWO. Or wait, TTWO. So this is Take-Two Interactive. If you've ever heard of Rockstar Games, which owns GTA 5, Red Dead Redemption, this company owns that. So this company is literally GTA publicly traded. And as you know, GTA 6 is going to come out sometime this year. So that should be a huge revenue driver in the future for them. Because right now, if we look at their sales, the sales are flat. It's down 0.5% year over year. But when GTA 6 come out, that should make them a boatload of money. So, Alan, here we go. Alan said Nike stock. I feel bad. I actually just completely sold out of this company. I sold all my Nike at $78. And, well, here it is today at 54. And here's why I'm just going to be careful with Nike. I'm kind of looking to buy back into them, but they lost their growth. The revenue's down 9 and the net income is down 32%. So they really got this doesn't even include the tariffs yet. This is just their own business right now. It's going to get worse with tariffs probably, but their net margin's only a 7% now. It's down 25%. That's really not good. And if we look at their footwear revenue, like their shoe sales are down 12% year over year. So they kind of just lost their growth. So I'm being careful with Nike. I want to see the growth come back. I've seen so much talk about Ford. Yo, what up, Jamie? So yeah, Ford right here. The thing is with Ford, I would not want to own this stock. They're literally the stock price is lower than it was back in the year 2000. So imagine that if you bought Ford in the year 2000, you're down on your money. But the main reason a lot of people like Ford is because of that dividend, because you get an 8.5% qualified dividend with Ford. I'm not sure how sustainable that is, but yeah, you're not going to outperform the market in the long run owning Ford, I think, but they're interesting. Yo, Erica said Home Depot stock. So yeah, HD, this is kind of another not kind of recession resistant company. So I love the dividend. You get a 2.65% dividend and the payout ratio is at 60%. It's healthy. You get $9 a year back in dividends and the valuation is at 22. So they're trading at 22 times net income. Seems pretty fair to me that they just make 3 to 4 billion of net income every quarter. So yeah, I do really like Home Depot. What's a good app to get started with? Hey, all these apps I'm using are in the link tree in my bio. This one right here is called Robinhood. It's the second link in my bio. So if you want to get this app right here, it's like a very simple brokerage right here. Like I keep all my dividend stocks in here. I have my Roth IRA with Robinhood as well. So yeah, this app's called Robinhood, second link in bio. But then I also have this brokerage right here. It's called Mumu. It's the first link in bio. I really like this one because of all the analysis you can do. So let's go look at Netflix right here. Here's what's so fascinating about Netflix. So check out their premium subscribers right here. Last quarter, they had 282 million premium subscribers. Now they have 301 million premium subscribers. So it really just jumped up. And the Squid Games, the Super Bowl was on Netflix, so I watched it on there. Anyway, the net income was $1.8 billion, up 100%. So Netflix, I love the subscription, reoccurring revenue for them. Squid Games is doing good for them. I like them. Do you know what the best recession-resistant company is? In my opinion, the most recession-resistant company is a McDonald's. This is not a restaurant. This is a real estate and royalty company. Whenever you buy something at any McDonald's, you go spend $100, 4% of that just goes back to this stock as a royalty. On top of that, McDonald's owns the land under every store. Look in 2008, every stock fell in 2008, but not McDonald's. They actually acquired a bunch of new land. In a recession, people's stomachs, still got to eat. So anyway, let's keep going here. Um, uh, what other apps would you recommend? Yeah, all these apps I'm using are in the link tree in my bio. If y'all also go to the link tree in my bio, I compare all the apps. Like all these apps have different things. Like Robinhood's really good for options, Webull, but Moomoo's my favorite one. Like check out this app right here. You can also check like Super Investors portfolio. Like we can see Kathy Wood's top holdings, Nancy Pelosi's top holdings. So yeah, if you want to get this brokerage, it's in the link tree in bio, first link there. But enough of that. Sorry, people keep asking. Let's keep going here though. QUBT, that's a quantum stock. So if I was looking for a quantum stock, to be honest with you, here's the quantum watch list. I'd rather own a Google or IBM or maybe even a Honeywell. I would probably avoid like the QBTS. Like here's why. Let's go analyze QBTS for example. I'll just show you the numbers for yourself, and you could just draw your own conclusion. So look at this company's revenue. Literally, the revenue was down 20%. It's only 2.3 million. So the sales of this company are $2 million, and they just lost 90 million of net income in the most recent quarter. Now I get it's supposed to grow in the future, but QBTS, this is just a pure momentum stock right now. They don't have any real revenues. But if I was looking for a quantum stock, I'd buy Google. They have the money and the talent to be the industry leader. So that's what I like about Google. Gold and oil. Yeah, dude, oil. Gold is actually ticker symbol IAU. So if you're looking for the commodity of gold, it's ticker symbol IAU. And the commodity of gold is pretty close to an all-time high right now. Whenever there's war fears, currency fears, a lot of people go into gold because, it's safe haven asset. So let's see. What up, Turk? How's it going, man? Where are you seeing the insights? Yeah, you just go to the Discover tab. Yeah, if you want to get this brokerage right here, it's in the link tree in bio. It's the very first link there. GEHC. So this is, I believe, GE Healthcare Technologies. Huh. So this must have been from the split off. So let's see right here. So yeah, this app's called Moomoo, or it's a brokerage. Link tree in bio, first link. So anyway, they do imaging, advanced visualization, patient care solutions. Anyway, what's the revenue? So the revenue is up just 2% year over year. What about the bottom line? So actually, they're making a lot of net income, 740 million of net income. Yeah, the net margin really just grew right here, 14% net margin. That's really impressive. So yeah. Anyway, yeah. Hey, Ethan, all the apps, this brokerage I'm using, all of them are in the link tree in my bio. Palantir, yo. Palantir, this is a great growth company. Palantir also has no debt whatsoever. So Palantir is a debt-free company, which is kind of cool. And the government literally loves them because most of the revenue comes from the government. A lot of police stations actually use Palantir, and the revenue is up 41% year over year. So Palantir is an insane growth company. Same with the commercial revenue. Commercial revenue is up 38% year over year. But the valuation is still a little high on Palantir. They're trading at 400 times net income, but they also have no debt. You got to add that to the market cap. They have 5.2 billion of cash with no debt. Subtract 5 billion from the market cap, that's not that much. It's like 3% of the company. So the 3% of Palantir's market cap is just cash. There's your here's a really cool company. Has anyone heard of this is the perfect ticker symbol. The ticker symbol is TKO, and guess what they own? They own the UFC and they own WWE, the wrestling, World Wide Wrestling. So this is a very niche company. They sell like the rights to their show and stuff. So yeah, they own UFC and WWE, and they make net income. They had that one-time adjustment there, but they make net income every quarter. So yeah, TKO is a pretty interesting stock. Here's one. Someone said Roblox stock. So yeah, let's go. That's a Kathy Wood stock. So if we go to Kathy Wood's portfolio right here, she owns Roblox, and it's 5.9% of her portfolio. So there's some good news, but there's also some bad news about Roblox. So we can see their active users. Wow, they actually have, look at that, 85 million daily active users. It's a lot of people on Roblox. But here's the bad news. This company's kind of burning net income right now. Check that out. They're losing 200 million of net income a quarter. And if we look at the balance sheet, they're highly leveraged. They have a lot of liabilities. So I would be careful with Roblox. The growth is great, 31% sales growth, but I'd like to see them get net income positive. They have a lot of stock-based comp. Yo, Jesse said LVMUH, or wait, is it LVMUY? Yeah, so did y'all know Louis Vuitton was publicly traded? They own a lot of different companies. So this is Louis Vuitton, Dior, Hennessy. This is their stock publicly traded. They're a European company. And look at how diversified they are. Fashion and leather goods, which is Louis Vuitton, selective retailing. They're in watches, jewelry, high margin industries, perfume. So and this is another very internationally diverse portfolio stock. Like look, 25% US, then Europe, Japan. So this isn't a U.S. company, but yeah, they kind of lost their growth. That's why the stock is down so much. The sales are down 7%, net income's down 23. So you're losing their margins, kind of like Nike right now. So yeah, um, I like them more. I honestly I probably like them more than Nike. I don't, but they're EU. Oh, yo, hey, try not to spam. Hold on there. We gotta um let's see. Ooh, let's see. Good to see you, Stocks and Sports Guy. How's it going? So someone said Yum Brands, ticker symbol Yum. So did y'all know Taco Bell is publicly traded? So Taco Bell and KFC, I believe, are owned by the stock. Let's check it out. So yeah, look, Kentucky Fried Chicken is 41% of the revenue. Then Taco Bell is another 37%. They got Pizza Hut, Habit Grill Burger. Anyway, this is another kind of real estate royalty company, kind of like McDonald's. They're making like 40 million a quarter. This company used to be owned by Pepsi. Literally, those restaurants right here, KFC and Taco Bell, used to be owned by Pepsi. So if y'all are wondering, like, why do they only serve Mountain Dew products? Why do you see the Baja Blast at Taco Bell? It's because the Pepsi actually has a lifetime contract with Yum Brands to only serve Pepsi products after they got spun off. Cool little story there. Here's Coca-Cola. Yeah, that's a classic Buffett stock right there. So if you're looking for like a higher yielding one, yo, 0x retrieval. Thanks so much for the 5 roses, dude. I really appreciate you, my friend. But yeah, if we go to Buffett's portfolio right here, 11% of his portfolio is in Coca-Cola. And this is, he has a nice little dividend yield on cost on this, but let's see. Um, Oh, if it'll load here. Yeah, so hey, if y'all want to hit the follow button, we go live every day, twice a day, by the way. We'll be live later tonight for sure, or in a couple hours. But anyway, look at Coca-Cola right here. Let's check out the dividend. They have a 2.84% dividend, completely sustainable. The net income's really nice. They just make 2 to 3 billion of net income a quarter. What? Oh, hey, Davey, this is a brokerage right here. If you want to download this brokerage, it's in the link tree in my bio. It's the very first link there. It's free. Yeah, cool beans. Yeah, first link there. Oh yeah, ASTS Space Mobile. So I actually don't really like this company too much. And that's because they don't really have any revenues right now. If we go to the revenue right here, oops, what did I just click? If we go to revenue right here, like look, the revenue was 1.9 million in the most recent quarter. So like they don't have much sales, literally to a million of revenue, and they also lost 50 million the same quarter. So anyway, I would just avoid ASTS. I'd kind of just look for a different company. I mean, yeah, the sales are growing, but it's only 2 million. It's probably going to grow in the future. Yeah, actually, yeah, look at that data from S&P Global. Look in 2 quarters. The revenue is supposed to be 7 million. But again, 7 million of revenue, what's the market cap? Yeah, they're a $6.8 billion company. I'd be careful with that one. Let's see. People be willing for me replace. Oh, you're talking about like a Beyond Meat. Yo, this is a sad story. Have y'all heard of Beyond Meat before? The plant-based meat. This stock is at an all-time low right now because they literally just burned so much money. Look in the top right. This is a $223 million company. So the whole company Beyond Meat is worth 220 million. And look at the net income right here. This is where it's kind of scary. They lost 44 million just in the most recent quarter. And hey, stocks, sports guy, thanks so much for the goat for the little gift there. I appreciate you, friend. Yeah, look at this. They just burn money every quarter. So this is why it's so important when you look at a stock. Just take a quick look at the net income because literally this company loses over 10% of the company like a quarter. So someone said Kroger stock. Yo, Kroger. If we go over here to my Robinhood account, to my Roth IRA in my Robinhood account, I actually own 5 shares of Kroger, and I bought 3 shares of Kroger today. So yeah, that's kind of like a grocery store. Oh, dude, Innodata's up 8%. This stock is $32 right now. Oh, sorry, that's my phone. But look at the history right here. I bought on today's April 7th. I bought 5 shares of this stock this morning. So yeah, that my Roth IRA is so bad. Look at this. I haven't even had it for a year. It's down 10%, but I just try and put $20, $30 every month into my Roth IRA. Yeah, hey, this app right here is called Robinhood. If you want to get this app right here, it's the second link in bio. It's a very simple app.
you can't really do any analysis on here, but it's fun for like options. Like, oh yeah, here are all the stocks that we own. Every stock is green on the day. No way. Check this out. So every stock on we own is up on the day. This app's kind of cool. They'd make options simple. Like you just kind of click, what do you think will happen, or what do you think what will happen? They kind of guide you through it. But anyway, I I love this app right here for the analysis. So yeah, let's see. Uh, I talk about mindset. Hey, well, yeah, that's what's up, Dutchy. Yeah, you got to have a disciplined and patient mindset in this environment. Like, you can't spend all your money at once. In my opinion, not financial advice. You got a dollar cost average into the market, slowly buy into them. Uh, yeah, Kroger is also like a recession resistant kind of company. Um, so let's see. Uh, do chart for Broadcom. So, dude, what up, sports guys? So, yeah, Broadcom, I absolutely love this stock right here. Yeah, hey, mans, I like this brokerage right here. If you want to download this app I'm on right now, or this brokerage I'm on right here, it's in the link tree in my bio. It's the very first link there. Um, and it's a free app. Anyway, look at Broadcom right here. A lot of people know them for their semiconductor solutions, but I love them for their infrastructure software because look at this growth. You can't make it up. It was 2 billion a year ago. Now it's 6.7 billion, up 50%. I mean, this is incredible growth. And same with the free cash flow. The free cash flow was up 28% to 6 billion of free cash flow. The net income, it was at a new record as well. So Broadcom also has a 1.5% dividend. So nice. Oh, Cartier said Google stock. Yo, what's up, dude? So Google, this is another one I do own. I might be biased, but I absolutely love Google stock. This is one to just buy and hold for the long run. No need to ever sell them. They have an 18 PE. They own so many businesses. They own Android, YouTube, Google Cloud, Waymo, and look at the net income. This is why I can't sell them. Net income is up 28% to 26 billion. So incredible net income growth, and I can't sell them. The valuation's too cheap. I'm buying them actively. So anyway, UNM. What's this one? UNM. So I've not heard of this one. Unum Group. Well, look at that. The stock has done incredible since 2019. What industry are they in? Are they in energy? So closed block. What does that mean? So that the revenue hasn't done too good there. What about colonel knife life? Anyway, doesn't look like the fundamentals are growing. Let's see. Yeah, revenue's up 3%. So nothing crazy. Revenue's up 3%. But look, they are net income positive. They're making like 300 million plus of net income every quarter. You also get a 2.2% dividend yield. That's a low payout ratio for the dividend. So actually UNM's pretty cool. Yo, that one dude. Yo, have you been buying today? I didn't buy much today, but I bought if we go to my Robinhood portfolio right here, my Roth IRA, I bought InnoData, 5 shares of InnoData, and 2 more shares of Kroger. So that's that. But anyway, here's my main taxable account right here. Every stock is now up on the day, but here's my total percent change. We're still down bad on Google. I do on Google, by the way. I might be biased on them going over them, but yeah, these are all the stocks that we got in here. Here's the watch list down here. Oh yeah, I the year to date, I haven't really realized any losses. So anyway, I'm just holding on. Yo, stocks. Thanks again for the TikTok for the roses there. I really appreciate you. But someone said CEG is heavily discounted. Wait, yeah, Danny saw. What's up, dude? Yeah, CEG is heavily discounted. I'm actually down 12% on this company right now. I love this stock because this company owns 50% of all the U.S. nuclear energy reactors. So CEG is actually the largest pure play for nuclear energy if you're looking to get exposure. So that's what I like about them. Let's see. SoFi Technologies. You know what? I got you. See, let's look at SoFi Technologies. I got you, friend. We'll be quick about this one because I've gone over them a couple times. But yeah, let me show you this right here. A lot of their revenue comes from lending, but I like SoFi because of their financial services business. And check this out. It's up 85% to a new record. Incredible growth on SoFi there. And same with their bottom line, the incredible growth of their profits. If we zoom out, this company was burning money every quarter, losing a lot of money, but now they're making net income every quarter. Yo, what 1.5? Did you go? You should check out the Constellation Energy investor presentation. It's very cool. It's on their investor relations website. So Ryder Systems, wait, I have them on my watch list. Is it ticker symbol R? So yeah, this is like a transportation company. I've seen the Ryder trucks before. So yeah, check this out. We can see fleet management, supply chain solutions. How's their supply chain solutions doing? Wow, look at the growth there. That's especially since 2019. That's seen some very impressive growth. What about the bottom line here? So yeah, look at that. They're making pretty much 100 million of net income plus every single quarter. So yeah, any EU companies. Oh, here's my favorite EU company. Well, I don't know about favorite, but I think Spotify is an EU company. So check this out. Spotify. Has anyone heard of that app before? It's like a music app right here. Well, Spotify, check this out. Monthly active users, 675 million monthly active users. It's crazy. Yeah, premium, most of their revenue. Look at this right here. Look at their premium revenue on Spotify. It's incredible. And let's go to the free cash flow here. The free cash flow was 900 million. The net income was 400 million. So Spotify is a cool one, but the valuation's too high to really buy them. But Spotify is an interesting one. That they're a EU company. They destroyed Apple Music. Yeah, yeah, hey, like invest in what you use. Instead of if you spend like $10 a month on Spotify subscription, why not spend another 10 buying their own stock? You can buy like a fractional piece of Spotify. Same with like I love the subscription model companies. Like we just looked at Spotify. Another subscription you probably have is Netflix. Dang, look at this stock. They're pretty close to an all-time high. So instead of paying for Netflix subscription, I should have been buying the stock every month because we could see their premium subscribers. They now have over 301 million premium subscribers. Incredible. The net income is just 2 billion plus net income a quarter. Yeah. Yeah, the valuations are a little high on those two, but they're high valuations because they're really high quality. What app is this? Oh, hey, this is a brokerage right here. Yo, Bay Apple. If you want to download this, brokerage is in the link tree in my bio. It's the very first link there. Um, what do you think about Celsius? So yeah, CELH. This is a debt-free company. They actually just bought Alani. If anyone's heard of Alani before, it's like another energy drink. Kind of company, but they bought them to bring back the growth because if we look at the sales are down 5% year over year, and the net income just went negative. Sadly, they lost 18 million of net income. So they're buying Alani to kind of bring back the growth, and that's also why the stock price has done so bad. I think they lost their growth, and that's why the stock went from 90 to $40. So yeah, they're interesting. Salesforce looks cheap. Yeah, dude, I love CRM. I actually own this stock, by the way. Um, I'm like up 3% on them. I'm just barely up on Salesforce. But if anyone heard of Slack before, they own Slack. It's like a employee. Oh, thank you, TikTok. Okay. All right, there we go. We're back. But yeah, Salesforce, look at how diversified that they are. Y'all aren't gonna believe this. This is just one segment. Their services, look, at a new record. What about their sales? Sales at a new record. Platform, another at a new record. Integration, record. So every part of this business is growing, and so is the net income. Look at this. They're making 1 to 2 billion of net income every quarter. The free cash flow is insane. 3.8 billion of free cash flow. So incredible. Pan W did a 5-to-1 split 2 months ago. Let's go. Let's see. What was that? Hey, Will, what are you talking about? What happened there? Um, I don't know what happened on the stream, but anyway, someone said, "Oh yeah, Pan W is due to 5-to-1 stock split." So yeah, that's a cybersecurity stock. I do like Pan W. That's Palo Alto Networks. This is a great subscription model company. The stock price has done great. Nancy Pelosi owns a little bit of them, but look at their subscription business right here. It's up 21% to a new record. So Ed B, or yo Ed B, it's in the link in the description. This brokerage is called Mumu. But yeah, the subscription revenue is up 21% year over year. Incredible. And they're making free cash flow every quarter. They're making net income every quarter. So I do like them. Yeah, hey, this is a brokerage. If you want to download it, it's in the link tree in bio. It's the very first link there. You can track like super investors portfolio, see like Kathy Wood's portfolio and stuff. And it's where I like to park my idle cash. Like if you look in the middle of my screen, I got $500 of cash earning me the nice little yield. But yeah. Oh, Daniel said APLD. That's a stock owned by NVIDIA. So if we go to NVIDIA's portfolio here again, 18% of NVIDIA's portfolio is in APLD. And I actually really like this company. So I'll show you why I like them. It's actually for their cloud service business right here. Check this out. It's up literally to a new record, up 500% year over year. So with this incredible growth rate, what's it going to be this time next year? But you still got to be careful. They're still a money losing company, so you got to be careful. Yo, thanks so much for the subscribe, bro. Yeah, hey, if you guys want to support me, guys, I'm streaming on YouTube as well. So if you go to the link tree in my bio, my YouTube channel is there, or you can just type into YouTube, Nathan Robert. It mean the world if you hit the subscribe button over there. If you missed anything, you could rewatch the stream. And I don't sell anything. I don't have a course, book, WhatsApp, Telegram, Discord. Yeah, the only thing if you want to, this is a brokerage right here. If you want to download this one, D Smith, it's in the link tree in my bio. It's the very first link if you want to download this brokerage right here. But yeah, that pretty much wraps up the stream. I really appreciate y'all being here. If y'all wanted the follow button, we're for sure going to be live in a couple hours from now. We're going to be live probably 2 more times today. So anyway, if you want to help me out, please hit the subscribe button on my YouTube channel. It's in the link tree in bio, and I'll see you all later. See you all in literally a few hours. See you guys. Thank you.